Hi, how's it going? My name is Akiba Leisman. I'm the CEO of Mako Mining. The way that I like to describe it is that we're doing three things in northern Nicaragua. We are now in what is effectively commercial production at a 500 ton per day mine, which is the highest grade open pit mine globally. We've been processing roughly half-ounce material since May 12th, when we started to put the high grade through that 500 ton per day plant. The other two objectives of the company is that now that we are in cash flow, the objective is to use that money to go and explore for near mine deposits. So we're going to be starting a resource delineation program that by the first half of next year will develop a resource at our most advanced satellite project called Los Conchitos, such that we can be mining Los Conchitos in San Albino, our current mine, at 1,000 tons a day by the very end of next year. And then thirdly, which I think is actually the most important part about the company, is that we do think that we're sitting on an orogenic gold mining camp, a district over here. So really, late this summer is going to be the first time that we're going to be putting any drill holes in our history outside the main San Albino and Los Conchitos area. We've already had a plethora of prospecting results across our 188 square kilometer land package that's finding very similar veins with very similar multi-ounce grades as far away from the mine as 21 kilometers.
Fantastic. Akiba, good to see you again.
Likewise.
Good. After we spoke, you had a little trip down to Nicaragua. What did you see?
Sure. So Nicaragua is doing well. Went to the mine. It was actually the first trip that I went down to Nicaragua since before the pandemic. Effectively, the borders were closed from late March of last year through early August. So we were able to get our operating team down at site really since August of last year. But that was a difficult task. Now it's really the first time that we have more or less normal ability to travel. Obviously, have to bake in some added time on either side of those trips to be able to go down to site more frequently. And I like to put this in context, is that we built a mine and have now commercialized a mine in the middle of a global pandemic in a country where effectively 90% of the kit that we needed for that processing plant, our mining equipment, really was imported. So this was truly a heroic effort by a lot of our team. It just shows that the dedication of our crew to be able to deliver this initial project of ours under very, very difficult circumstances in 2020.
Any teething problems?
Sure. So we were mechanically complete with the plant at the end of March, and even going back before, I like to have accountability to what our actual timeframes are. So I took over as full-time CEO of this company in August of 2019. And then right after that, we kind of laid our guidance for where we thought this mine should be. The three-stage plan of building this 500 ton per day mine, expanding it to 1,000 by the end of 22, and then proving that this is an orogenic gold mining camp hasn't changed at all over the last couple of years. The time frame to do that has. So when I took over in August of 2019, I told the market that by Q4 of 2020, we were going to be delivering the initial gold coming from our 500 ton per day mine. 2020 happened. We had a global pandemic. We got hit by two major hurricanes right in the middle of construction. We pushed back our first gold pour date. While that happened, in June of 2020, we pushed our first gold pour date to January of 2021. And then to be in commercial production in Q2 of this year, calendar year 2021. We actually did pour gold in January. It happened to have been at 10:30 p.m. on January 31st that we poured gold in January. And for all intents and purposes, we started to produce at levels that we thought that we view as commercial starting on May 12th of this year. So in Q2, even though we will officially declare commercial production on July 1st for our accounting quarter for Q3. So in aggregate, since 2019, there was probably about a 4-month delay to the project. And frankly, for what happened in 2020, that was a win. Now, specific teething issues with the plant. The plant there's no issues from an engineering and construction perspective, but we actually got hit by two things that we weren't accounting for. So firstly, we, because of our view of managing this deposit and this mine with the most amount of environmental sensitivity, right? We use a dry stack tailings storage facility. We have a tailings press. In order to dry those tails, we put them through a filter press to get rid of most of the moisture before we stack them. Those filter cloths themselves, under normal operation, should last maybe a few weeks before you have to change them. The way that the startup of the operation was going is that we were wearing them down in 6 or 7 days. So effectively, we ran out of those filter cloths. And then normally, when you have logistics that are fairly well stabilized from an international trade perspective, those should be able to get into country in a 2 or 3 day period. There was actually about a 5 or 6 week lag before we got our bulk shipment over at site. So that effectively shut off the filter press for a period of about 5 weeks because we had these relatively inexpensive cloths unavailable for that period of time. And then likewise, we had a second component in the refinery. We have an intense cyanidization reactor called a concept Acacia. For whatever reason, that concept Acacia was not allowing us to get our cyanide concentrations to levels that would be effective. So we put our gravity concentrates through this thing. You need to get it up to about 20,000 ppm of cyanide before it can actually process all the gold. We were maxing out at about 5,000 or 6,000 ppm. We had to take a lot of that process control software out, take out some of the plumbing, and mix the cyanide ourselves for that to work. So there was about a period of about 5 weeks where, even though the plant was mechanically complete, we had no ability to sell gold. All of that changed the first week of May, actually about a week after we last spoke. And then when we were happy with how the plant was operating, we started to put the high grade, the high grade material that we were stockpiling on site through the system on May 12th. That material was averaging about a half ounce material, 15 gram material. We're blending it a tiny bit with some of the run-of-mine ore, so it's going to be a little bit less than 15 grams from May 12th that we've been processing to date. But effectively on May 12th, we considered this operation in more or less commercial capacity, with the official declaration of commercial production happening, I guess it's tomorrow.
Okay, which is great. Okay. I think you described fairly normal run-of-mill situation. Can we talk about the feedstock? Okay, you've got some high grade, you've got some lower grade, just the nature of where you are in the orogenic body. So how are you blending that? Are you high grading first, getting all that out of the way, getting some cash in, or how are you playing it?
Right, so there's two components. There's the mine and the stockpile. So in the stockpile, at one point we had about a little over 16,000 tons of this very high grade material sitting on site, let's say grading roughly 15 grams material. So there was about 8,000 ounces of high grade stockpile.
Where was that from? Remind me.
And that was from the mine that we've been sporadically mining really since February of last year. So this has been going on. I would say we've been mining to a level that we would consider commercial capacity really since about February of this year. So in fits and starts in 2020, and then really continuously at roughly 500 tons per day since the beginning of this calendar year. Now, in addition to those, let's call it 17,000 tons of high grade material, there's over 100,000 tons of historical dump material. So the last time this was a commercial operation was in the 1920s, but there's been mining in this area going back since the time of the Spanish, from the late 18th century. So there's a lot of this material that's historical dump. It's not associated with the vein of the deposit, but on average through the life of mine, taking some pretty conservative estimates on where this is going to be coming out, will be roughly 3 grams a ton. To date, it's been about 2.5 since we started to mine that last year. And there's over 100,000 tons of that material. So another, let's call it 8,000 or 9,000 ounces of this historical dump material. We have not been blending that to any great extent. There's been a little bit that we've been putting through the mill, but we took an objective because of that 5-week delay to really just process the high grade. There was a lot of activities that we needed to do on our exploration program, and even from a debt repayment perspective, that we really didn't need to catch up on that 5 to 6 week delay to the startup of the operations. So we've been exclusively processing that material, or almost exclusively processing that material since May 12th. Now we're going to be getting into the best part of the mine. So what we've been mining for the last year was not the best part of the mine. We're going to be starting the best part of the mine, this area called the Porcelana Zone, really next week, certainly within the next 2 weeks. We're actually starting to get some sniffs of it right now. And then when we're in the Porcelana Zone, which is effectively similar grades to what we've been mining before, the difference between Porcelana and what we've been doing over the last year is instead of mining this ratty vein that's probably on average about 70 centimeters, the average width of the Porcelana Zone is over 2 meters. This is about triple the thickness of what we've been mining to date. So there's going to be an extensive period of time where we're actually going to be processing well in excess of, or mining well in excess of 500 tons per day of this high-grade material. It's at that point in time that we're actually going to start blending that with some of the historical dump material. So the head grades of this deposit are not going to be a half-ounce material or near a half-ounce material for the rest of the mine life. This is going to be more along the lines of the measured and indicated grade that we delineated last year, about 9.5 grams when all is said and done. But it will be the highest grade open pit mine in the world, bar none.
Okay, so explain the blending component, because if you're digging out high grade stuff, you've got a 500 ton per day mill. Why not just continue to process the high grade stuff? Why blend? Why lower the grade? There's
a few reasons. One, I think, is turned into a little bit of a red herring, but the primary reason is that we were a little bit uncomfortable kind of having volatile head grades, not to the mill, but to the CIL circuit, so the carbon and leach. We have two components of our processing plant. One is a gravity circuit, which pulls out the high grade there, and then we process that into the refinery through our intense cyanide reactor. And then the other stream coming from that gravity circuit then goes into our carbon and leach. Now we have 5 tanks that are there in our carbon and leach processing plant, and you better capture the rest of the gold in those 5 tanks, because if not, it's going to the tailings. You'll lose that gold forever. So there was some concern that because we had 5 tanks, is that if you had, let's say, carbon and leach head grades going from 3 grams or 4 grams, which is probably on average, because we get about 50-60% recoveries in gravity, and then you spike it to 7 or 8 because you're kind of overwhelming the system, are you going to lose some gold? We actually tested that. It wasn't really intentional, but there was a period of time, because we needed to enhance some of the pumps to the gravity circuit, where we actually did not have access to the Nelson concentrators, and then we were feeding directly into the CIL with some of our high grade materials. So there were a few days, just a few, where the carbon and leach head grade was over 10 grams a ton, and actually it worked great. We recovered the gold in the first 3 tanks. Recovery times are clearly faster than what we were modeling before. So that was a concern going in, and kind of why we wanted to blend this and keep the grades somewhat consistent coming into the mill. I actually think we're okay if we have a little bit of volatility from a head grade perspective. The other operational impact, which I do think is important, and this does have some validity to it, is that the historical dump material, it's been mined as early as 70 years ago, but some of this material has been sitting outside for hundreds of years at this point. It's saprolitic. So that material is saprolitic. It gets wet, it goes into your mill, it's going to turn into pudding, right? So this is the stuff that kind of gums up your material if you're only going to be processing that material. We go through a rainy season in Nicaragua. Last year was kind of a crazy rainy season, but the normal rainy season is usually from May to November. If that historical dump material gets wet and you try to put that through your mill, it's going to be very, very difficult to get 500 tons per day of that material. So in order to optimize the full mine, you want to be blending some of this native quartz material, which goes through the mill like butter, and then you you want to blend it with some of the saprolytic stuff, so you can actually get a nice steady feed. The third, which is really, for lack of a better word, it's optical, right? We're a public company. Like I don't think it's great for a company to be 15 grams, 9 grams, 10 grams, 3 grams, 15 grams. It's not the best economic answer for your question, but there is some level of validity to kind of making sure that you have some stability in head grades as a public company as well.
I buy that. We've seen that a lot. You've actually answered the question. Someone did send a question about pump upgrades, so you've answered that one. I definitely would not have asked that. I wouldn't have known to. So the question from the same person though is also talking about the tons per day over the last couple of weeks. What are you seeing?
Right. So we had a series of pump upgrades that we needed to make really across the system. It started with the Nelson concentrator where we had to like jump the circuit and put the high grade through directly onto the CIL, and then eventually it went through the filter press, and then even some of the carbon advancements. So when we have been turned on, we're averaging maybe about 440, 450 tons a day, but we've only had about, I would say, I guess this is the last day of the month, we've only had about 25 days of availability for our plant. So depending on how you count, we're either at 400 or 450. So 450 when everything is kind of working okay, or 400 including of the 5 days downtime. We've had about 6 days where we've put in excess of 500 tons of dry tons of material through the plant. And it's clear that we're not fully optimized. I'm actually pretty confident that when everything is kind of running on rails, that we'll have the capacity at 100% availability to be close to 600 dry tons a day. It's going to take us a few months to get there. I think having 500 tons per day as an average is the right thing to do. We'll get there soon. To me, commercial production declaration is about 75% of rated capacity, about 375 a day. We're well in excess of that right now. In terms of problems and rankings of problems over the course of the last 6 months, this is a big one at the end of the day. But I view this as a 3 or 4 level problem that we'll go through over the course of the next 2 or 3 months, as opposed to not being able to produce gold like that was the case in April and early May. That was a level 10 problem for the company, and luckily that was resolved.
Yeah. Okay. So what I've liked is the development of the company and its attitude to how it goes about doing things, how it views things, because the optics are important, and how you've managed them in the past few months has been really, I think, good for me looking in. With regards to how you optimize your cash allocation too, you've got to think about that. I'm intrigued by that because, getting rid of debt, great. You've got some exploration, which I'm sure we'll talk about in a second. You've got to kind of map out how you do that one. You raised a ton of money last year, at the right time. So you're good for cash, but how do you get this plant up to 1,000 tons per day? What's the time frame? Can you accelerate it?
Sure. So the capital that was raised for the company, there was about 40 million in equity in 2 tranches. One was done in a rights offering in 2019, available to all shareholders. And then there was a roughly US $20 million capital raise that was done in June of last year, which was the last equity that we needed to do to facilitate our 3-stage plan. The controlling shareholder, Wexford Capital, took roughly their prorated interest on that capital raise as well. In addition, there's $21.5 million of principal debt on the balance sheet, a little over 15 to the controlling shareholder, Wexford, and then a little over 6 to a true third party called Nabari. I will say Wexford, myself, Nabari, and without speaking for everybody, I would say our shareholders are all committed to kind of moving forward on this 3-stage plan to get the first step, the 500 ton per day, highest grade open pit mine in the world, up and running. We've been effectively at commercial production since May 12th. The ability to use that kind of as a stepping stone to go and facilitate project 2, which was to get this at 1,000 tons a day, and then to do the regional exploration drilling as well to prove that this is an orogenic gold mining camp. Now, in order to get to 1,000 tons a day, practically speaking, there are going to be individual days that we're going to be mining in excess of 1,000 tons a day of quote unquote ore. But for us to be sustainably at 1,000 tons a day, we need to be mining simultaneously a separate deposit. You're just not going to be able to get more than 1,000 tons a day out of San Albino with a number of faces that we'll have access to over at our current mine. So the most advanced of those properties is Los Conchitos, down to the south. We have enough information there that we can do an internal three-dimensional model that's roughly the same size as what we have over at San Albino. If we wanted to, we can put out an inferred resource in a matter of weeks. However, we are going to be infilling that aggressively. That program, frankly, should have started about 5 or 6 weeks ago, maybe even slightly longer. We're going to be starting to aggressively infill that, such that by the first half of next year, we'll have a maiden resource, a mineable resource in a very similar vein to what we've put out over at San Albino, such that we can actually be mining it at 1,000 tons a day by the end of next year. Now, in order to enhance our plant and the capacity to get to 1,000 tons a day, there are minor component adjustments that need to be made. We've laid the civil works to expand our CIL operation for another series of 5 tanks. It's going to require minor fabrication. We'll probably have to have another few generators over at site. Our crusher can easily handle 1,500 tons a day. We have 2 parallel mills. Each one can handle 600 tons a day. If necessary, we'll likely have to build another tailings press to handle this at 1,000 tons a day. But all of this can happen internally funded with the cash flows generated from the mine to be able to deliver the plant with the capacity to run at 1,000 tons a day, predicated on us having mine feed. But we'll be able to deliver that plant by the end of next year, such that we can start processing this on our schedule as well.
Right. So you put out a resource on Los Conchitos. When did you say? Sorry, I didn't quite catch that.
Sometime in the first half of next year, we should be able to.
First half. Okay, fine. And because you're already a producer, can you take shortcuts with that, or are you going to go through a process?
Well, it depends. It depends how you define shortcuts, right? So we clearly, even with the first go around over at San Albino, there were shortcuts taken in the extent that we did not need to have bank finance to go and build our project. But I think there was a lot of confusion on the resource that we put out. Even from last year over at San Albino, which I do think is a template for what we're going to be doing everywhere. I will stand up to this. The resource that we put out was of impeccable quality in terms of the amount of data that went into it, the ability to have a predictable resource model to develop a real mine plan around, such that our engineers could design like a real mining scenario. So yes, we didn't have a feasibility study, we didn't have a pre-feasibility study. We pulled the preliminary economic assessment that our predecessors put out in 2015 because it was predicated on a resource model that we didn't endorse. So there were no, in our minds, shortcuts taken to getting the geology right. That being said, there was an accelerated plan where we don't have to go through the standard modus operandi in order to access certain types of capital, which is perfectly fine for companies. In fact, like for us, at some point, we're going to have reserves at this at our operations, just from a public market disclosure perspective. But in order for us to get this up and running, we did not take any shortcuts with understanding the geology. We did not take any shortcuts with engineering our plant. We did not take any shortcuts with engineering our mine. But certainly this was taken in an unconventional approach in terms of getting this out there from a check the box 43101 perspective. Now, I do think that, because I used to come from the investor side in this business, and we happen to be in an industry that requires, I think, a fairly healthy amount of technical knowledge for people to make investment decisions. That's just the nature of the beast when it comes to geology and all the risks that go into mining. That being said, I do think that the quality of the resources that are out there in the industry for our peer group and frankly even for larger companies in terms of the engineering, the data that goes in, the understanding of the geology is such that I never found value to relying on a lot of that data. There's actually very little in the public sphere that I would use to underwrite my investments. Now, we've taken that approach as a public company, is that we need to get the data that makes us comfortable. We need to deliver on the plans that we set out. We have our own levels of credibility that we need to maintain and then eventually deliver on our execution. And that is going to follow through on our other two main objectives now that we've finished number one. So number one, we've delivered on under very difficult circumstances in 2020. Number two is going to be doing the same thing, getting Los Conchitos into a similar form as what we have over at San Albino, to be able to start mining that sometime next year, and then to be processing it at 1,000 tons a day by the very end of next year as well. And then to use all of that data, all of that knowledge, all of that engineering, all of that design in our processing plant to apply that to other prospective areas of our property, which we can clearly see eventually are going to be mines as well.
It's interesting you say that. So there's a bit of a segue, not necessarily about Mako specifically. I was talking to a CEO who's looking at doing some acquisitions, and he looked at 35 different sets of definitive feasibility studies in the hope of acquiring something. He said 30 out of those 35 were misleading, which is insane, right?
I buy that percentage. There are, by the way, there are some people who do really great work, like, and they should be commended for doing that. But I do think investors need to ask themselves, why exactly do you want that information? Do you want this information because you need to have a third party to be there as kind of like the rabbi blessing the data, because frankly you don't trust management, right? I would say that, by the way, is not an irrational thought process in an investment underwriting skill set either, is to have kind of like reputable people as a check. The only thing that I would say for investors in Mako is that we have a controlling shareholder. I used to work for Wexford. We have our particular way of doing things. If you do not trust management, do not invest in Mako. Like full stop. So I do think that we are in a little bit of a different circumstance, is that we can filter out a lot of the noise that are out there in the public markets. We raised capital when the markets were open. We have no issues of broadening out our shareholder base in order to deliver on our execution plan. But at the end of the day, one of the advantages, there are some disadvantages, but one of the advantages of having a controlling shareholder with access to capital is that you can filter out the noise and then just make decisions that make sense, right? So it's not like we're rolling the dice and taking shortcuts on building this mine. We're actually going through a very detailed process. Likewise, we have absolutely no issues of when we get everything that we need to do to show people what this mine is about, and that involves not only San Albino, but kind of bringing Los Conchitos and even potentially some other satellite areas into the fold. We have no issues of delivering reserve statements and actually having economics around those things. It takes time. And for us is that it's not like we needed to have these feasibility reports to access bank capital. That wasn't our strategy. It wasn't our objective. That is a very, very different statement to saying that we were taking shortcuts on to delivering these things, because it was the furthest thing from the truth. And we use Mine Development Associates, who I really do think are some of the best people out there to get that resource done. And I think they would acknowledge the same thing in going through this model, is that our people developed the bones of that geological model that went into that resource. And MDA basically said to us, this is frankly the first time that I've ever seen a junior mining company deliver us a geological model that we hadn't had to redo from scratch.
Right. I mean, the reason I asked that question about taking shortcuts here with Los Conchitos is because there was some misconception first time around. Okay, so for that reason, you've got to get this right in terms of how you approach it. Second reason is this is still relatively, at the moment, because we haven't talked about exploration yet, small scale. So if you do intend to grow, you are going to have to go back out to the capital markets at some point, presumably. I know you're positive cash flowing at the moment, or well, I hope you are. Is you got to earn their trust. So you're going to to get that scale, to be able to achieve that scale, not to be a small time, I don't know, chucking off a few million quid a day type business. It's like a weak business. You need to approach it the right way. So, and I do appreciate what you say is like, internally, I speak to loads of geos and they say they know very, very quickly how to approach projects, but they've got to lay the plan out in front of you with studies and scoping studies and feasibility studies, etc. So I know you're being very careful with where you come at it, but so when I asked the question about shortcuts, it's not a negative thing. It's a question of, can you see any way of shortening that process in the right way to get that mill thing going? As you've explained, there's a lot of moving parts, but
so it's actually a lot of components to that question, right? So let's start with the public market facing bit of this. Even if we were fully successful at all three of our objectives over at Mako, getting this up to 1,000 tons a day, you kind of have to arm wave around what the overall grade of the deposits would be at that point in time. But assuming, let's say, roughly the similar grades to our life of mine average over at San Albino, that means you're probably at 80,000 ounces a year of production, maybe a little bit more than that. Still too small to be an ideally structured public company. So Mako has always been about having a series of steps to get to some level of materiality, but then after that internal stuff was taken care of, there's always the real end game, which is to be involved in M&A in some form or another, and that can go in all three directions. Us buying something, us merging within another company, ideally without diluting asset quality, or us getting to enough size and scale that we would be of interest to somebody that has the capacity to pay. And then there's quite a bit of time for that to happen. So that's firstly. Secondly, with respect to needs for capital and kind of how we face the public markets in that regard, is that after the equity raises happened and the Nabari facility coming in February of this year, that was sufficient capital even with the delays that we've had. So I've had this conversation with people that should know the math on this, but it's almost like there's a disbelief in terms of what we're doing. So I try to break it down on a simple basis, because we've been mining for a year. It's not like spreadsheet math anymore. On average, we're pulling out maybe about 300,000 tons of material a month, thereabouts. Sometimes it gets as high as 320, sometimes as low as 280, thereabouts. Our mining contractor, on an all-in basis, attributable overhead associated with it, is running about $2.60 a ton. The marginal cost to mine that material is actually below 2 at this point, but 260 is a number that investors should keep in mind. Assuming 300,000 tons a month, that's roughly about $800,000 a month. It does not matter what the strip ratio is. It's $800,000 a month out the door to move our 300,000 tons. Some of it's ore, some of it's waste. Life of mine to date has been about 19-1. Since January, it's been about 14-1, just to put this in context. But $800,000 to mine. Now, when we were doing our internal workup on getting our plant built out, which was numbers, frankly, that I never believed. But because when we actually had this internal workup, we were coming up with numbers like $65 to $75 a ton of processing costs, which just never made sense to me. And now that we actually have
which way? Too much? Too cheap? What? Didn't make sense to you? How?
Way too high. just too high.
Okay.
And I think it's fair to say that we're not in the most efficient of operations right now. They're stopping and starting really since early May. But even with that, we're coming in at less than $50 a ton. So who knows where this is going to be in the long run. We're running certainly under how we were modeling it. But for investors to use $50 a ton, if we were running this at 500 tons a day on average for the full calendar month, that's another $750,000 a month. So now you're like 1.55 million. We're actually a little bit less than that because with our downtime, we only processed for 25 days this month, and actually at 440 tons a day, averaging on those 25 days. Now you're at about 1.55 million, and then you got the actual overhead. So the overhead it's probably going to eventually creep up to about $300,000 a month over there. So you're looking at about 1.85 million, 1.8 million dollars a month. That's our nut. We've been producing over 1,000 ounces a week since this mine started on. So this is an entirely profitable operation since we got this up and running. There was some inventory buildup during that time, which now we're at that steady state with that. But going forward at these types of head grades, well in excess of 90% recoveries going into the mill, this is a very profitable operation. There is no needs for capital in order to achieve our 3-stage objective. That being said, we are a public company. I'm very transparent in terms of what we're going on, both because I like to keep shareholders informed, but also because we recognized our deficiencies by not having a feasibility study. That one of the reasons why we are so transparent is to kind of counteract that. Is that if you actually have questions about what we're doing, great, ask them. Like, we really will put out whatever information that you have. It's going to be a trade-off. There's a disclosure trade-off, which I fully respect, by having a third party to put this information out. On the other side, I've taken the approach of just being open. So we have all our drill holes with collars on our website. We put out like constant updates in terms of what we're doing, even on a daily or every other day basis on our social media, just to keep shareholders informed of what we're doing. So we take our interactions with shareholders very seriously to keep everybody informed and understanding what we're doing. And then really it's our objective, now that we've finished that first objective, is to use that cash flow. And we have support from our shareholders, the controlling shareholder, and then Nabari Capital, the lender, the third-party lender on the outside, to achieve those objectives by making sure that there's enough capital that's there to go and fund the development of stage 2 and 3. And luckily we have support across the spectrum in that regard. But there's still a lot of work that needs to happen. I told everybody this in 2019. This was a 5-year plan to execute on these 3 stages. We're now almost year 2 into that. We delivered on the first one, and now the focus is going to be shifting not only on getting our operations as efficient as possible, but also to focus on the growth objectives, which is number 2 and 3. And now that we have a chance to actually take a little bit of a breath and a step back, we can then start really in the long run taking a look at what the real exit strategy of this is, and that's to be part of a larger mining company. Because being in 80,000 ounce a year producer is in a single country in that regard is not going to be the ideal structure of Mako going forward. I don't think we had any capacity to look at M&A before May 12th of this year. Now we're starting to see some things that are starting to make sense.
No drilling by the sounds of it, because you said you should have started 4 or 5 weeks ago. So what was the delay there? And 2-part question, how much are you how many dollars are you allocating to a drill program? What's that going to give us?
Yeah, the board approved an $8.5 million program in February, predicated on us having the capital to do it. So the delays were clear. It's like we had those 2 issues at the plant, which were I had more gray hairs now than I did before. Truly unbelievable what happened. But when we ran out of filter cloths, couldn't get the cyanide up at the Acacia reactor, there was a period of 5 weeks where this company did not have the ability to sell gold. That's the 5 week delay.
But you had the ability to drill. You had money, right?
No, we like you can take a look at our presentation. It's different today than what it is on our website. It's higher now, but we were actually at about $1 million on the balance sheet. So we were in no position to be spending aggressive money. We never actually slowed down on our drill program from last year. We always had 2 rigs. I mean, this was essential that was going to be moving forward. And I guess the way that we allocated drilling budgets, and one of the reasons why the pace of drilling information is slowed down, is that the big dollars, if you will, are those dollars that are going to be getting us into a resource delineation scenario. So kind of the infill work over at San Albino 51% of our composite data is coming from composites less than 15 meters away. So this has been, for all intents and purposes, drilled to within 15 meters of spacing. I think you're going to have a similar capacity over at Los Conchitos with those additional rigs. That rig that's been on site has not been doing infill work. That rig that's been going on site is to try to get the confines of where these particular targets are gonna the margins of the targets are. So this is let's call it medium risk step outs in terms of what we're doing right now. And sometimes you hit, and then sometimes with the geology and the geometry on some of these veins, there are some confusing results that come out that eventually just need to be infilled so we can answer those questions.
Right. So you've got 2 rigs at the moment. Are we getting more rigs as part of the 8.5?
Yeah. So they're on order right now, and then hopefully by the end of July they'll be on site. Those frankly should have been there, I would say, maybe 2 weeks ago. If we were putting in the high grade on April 1st instead of May 12th, they would probably have been on site in the early part of June as opposed to the end of July.
Got it. Okay, so you're balancing the books. You keeping things, keeping plates spinning. Okay, so how many rigs will you eventually have for the rest of this year?
So 5 from a core drilling perspective, and then
diamond.
We actually have been using our production rig when it's not for operations to do very shallow target drilling on some of the exploration targets, principally focused on some of the direct satellites to San Albino. It's been a really effective tool. We'll probably have a second production drill ready for Los Conchitos. And I mean, that's the other thing that people should kind of keep in mind. The targets that we're targeting over here are for resources that eventually are going to be 10, 20, 30 meters from surface, like over at San Albino. Like eventually you can probably get a pit that's maybe 100 meters deep or so. But these are very, very shallow targets. And for a production drill that with a skilled operator, you can probably get down to about 16, 17 meters. It's a good, quick and dirty way for you to have a nice targeting program that can be followed up by diamond drilling. So the production drills are not for public consumption. It's really there for targeting. Now, the $8.5 million program that was financed, or I should say that was approved in February, that would have equated to about 50,000 meters of drilling for the full calendar year in 2021. We have done at San Albino and Los Conchitos to date probably around 16,000 meters. So, but that pace will pick up. I actually don't think we're going to be materially off by the end of the year. We just need to catch up a little bit from that 5-week delay. Okay,
but you will be playing catch up. And how are you coming at the orogenic? Because we talked about, we previously orogenic up in Canada, and they come at it a certain way. What are your thoughts on that? Have you got anyone who's dealt with orogenic ore before?
Sure. I would say the majority of gold around the world comes from these mesothermal systems. I think what's unique about our project, well, first of all, the geology is unique relative to this region. This part of Central America, Nicaragua, generally are volcanic hosted epithermal deposits. Not surprising, there's a picture of a volcano on Nicaragua's flag, so that's not surprising at all. This is a sedimentary hosted orogenic system. I would say the host rock is a schist. It almost looks like a shale, if you will. It's a very, very brittle rock. And then you have complicated geometries on some of these veins where you have pinches and swells and various boudins that develop just because of the rock quality. It's a very, very young system, probably about 80 million years old. And then in terms of how we're going about it, we actually did quite a bit of work from a prospecting perspective on the rest of the 188 square kilometers of ground that we have. We picked up another concession in February of last year called La Segoviana. We started at the tippy top of that concession, which is 21 kilometers away. And literally on the border of that concession with government-owned ground to the north, we found 40-gram material in situ in vein. We put that out, press release. We've scoped out a modicum of continuity on those veins of about 6 kilometers, but even some of the results that we've seen now, it does look like those vein structures are coming straight back down to the mine. So there are these this potential to find really a series of these deposits. We have well in excess of 200 targets on our ground that have now been prospected with grades that are grading in excess of 10 grams that have never seen a drill hole before. And then we need to systematically go after that. So starting this summer, we're going to be putting the first drill program on that. At some point after rainy season, when it's a little bit easier to do, we'll have to cover the entirety of our land package with a geochemical survey, a soil survey. That has been a decent guide for how we're going to be going it. So there's a lot of things that need to happen, but this is going to be exploration for years to come. Self-funded.
Last point, Nicaraguan government, any news? How are you interacting with them? We've seen it's sort of this whole the sort of South American, Southern American countries are not generating positive headlines at the moment because of elections and all sorts of things. So people are maybe a little bit nervous about investing down there. How are you getting on with the folks?
Sure. So elections are coming up in November. So there could very well be tensions that develop between now and then. I don't think that would be a surprise. I would say our communication is generally at the level of the mines ministry. I think there's expectations, as with any bureaucracy, that there's going to be a changeover of bureaucrats, right? So the mines minister may change after the elections and his assistants and so on and so forth. That's not an unusual event. Now, in our communications with them, they're basically saying, "Vamonos, guys, you might want to get things in front of us before that happens." So for instance, we acquired a concession called Puerto Rios from another public company at the end of 2019. We got the La Segoviana concession, which we just finished the prospecting on in February of last year. And then the Puerto Rios concession, unfortunately, the drilling permits didn't transfer over with it. So we had like a full site visit with Morena a few weeks ago and are trying to expedite getting drilling permits in there prior to the elections in case there is a change in individuals there. I doubt that there's going to be a change in the ruling party, but certainly there's a high probability of change in individuals, whether at the senior or even mid or junior level side of the.
But in terms of the rhetoric, again, we look at Peru, we look at Chile. You've got this very socialist agenda, obviously. That history, decades of it. But you've got politicians arguing the point, making the point, we're going to tax mining companies, we're going to tax foreign investors, we're going to, you know what I mean? And that's just kind of just made people a little bit wary. And we've seen this in Chile. But the reality, we've spoken to politicians in country, or president of mining associations, or ambassadors, and so forth, which we have bothered to do, is that it's just campaign rhetoric, it seems. But are you suffering from that? Is that part of the discussion on the campaign trails out there, or is it just really a case of maybe a change of personnel?
Specific to this election, this has not been about changing the tax code. I think that
or constitution or anything like that, right?
Or constitution.
Yeah.
That being said. 2020, 2021 were an extremely stressful environment to the government coffers of most emerging markets, not even just Latin American ones, but most emerging markets. The tourism industry, which was a big industry in Nicaragua, was especially hard hit as well. So people are looking for new sources of revenue that should not be a surprise. I would say our interactions with the government to date has really been more of encouraging getting more production up so they can tax that production as well under a similar tax regime. but if things change, that shouldn't be a surprise to anybody in any jurisdiction. Like it's not. We happen to be in an environment right now where governments need additional capital, especially when they do not have reserve currency status. So they actually have to fund their budgets.